We just completed the first week of August, and the Kenyan stock market, through the Nairobi Securities Exchange, has had some interesting movements. Of course, I'm going to make you a video about how the different stocks performed, and I'm going to share that with you sometime maybe tomorrow or even start of Monday. But in this video, I want us to talk about the biggest lessons which we can learn from the Kenyan stock market so far this month of August, because there's been ongoing different things moving really, okay? Right from the fundamentals hitting the market, right from companies paying dividends and closing their books, and even many other factors, which actually culminate into lessons which I believe each investor out there need to learn, because these lessons are going to repeat, and if you understand what they mean, you'll be able to become a savvy investor as time goes by. In case you are new here, my name is Afagzad Sifuna. I am a finance expert and qualified accountant, bringing you amazing videos about investing and making money each and every day. In case those are kind of topics which you like, down there is a button called subscribe. Click the button to subscribe to my channel, and don't forget to drop a like on this video. Having said that, what are these 5 lessons? The first lesson, which I believe most investors out there need to understand, is that there is something called Ex-Dividend, which is a situation which typically pushes the share price or the different shares down. And we've seen this happen this month of August, okay? Where there's been some ex-dividend situation across different companies. Think about Safaricom, right? Think about Kapchorwa Tea and a few other companies where their share prices did decline, more so on the day they were closing their books. This doesn't mean those companies are bad, okay? That automatically doesn't make them bad. It's just that investors are changing their behavior when it comes to approaching the stock of that company. Reason being, at the point of closure of book, there is no rush in buying that particular share. And the reason for that is because already they are closing on paying out dividends, right? So if an investor is going to be banking on dividends, maybe in the subsequent cycle, and that is why on the day of closure of the books, typically we see the share prices dip that day or even the next day, as that is reflecting the market dynamics. And also think about it. Some investors could be doing something which is called taking their capital from the initial investment because they want to benefit from capital gains. They have already seen, for example, share price appreciation. They have also seen they have been paid dividends, right? So they could be taking out their capital because they've achieved their investment goal. That also could cause many people in the market wanting to sell a given share and few people wanting to buy at a particular point in time, therefore causing supply pressure, which as a result is going to make that particular share to drop a bit in price. It doesn't mean that share is bad. It just means it's reflecting the ex-dividend situation, okay? That is the first lesson, which this month of August has so far taught us, and I believe you as an investor out there, you also need to understand and appreciate that. And then the second lesson we've learned this month of August so far, and it stemmed from something which happened last week, is that bad news can actually hit the market. Case in point, about a few days ago, the Office of the Director of Public Prosecutions in Kenya, ODPP, did propose to charge 3 CEOs of Tier 1 banks in Kenya with a case relating to fraud, whereby there's money which was fraudulently passed through their banking systems without the banks flagging that. And the ODPP argued that that actually touches directly on the anti-money laundering laws of the country. What happened immediately after that? The next day, some of the stocks of this company, like for example, the KCB stock, okay, did dip in price. And even market-wide, we saw some interesting movement of capital, where there was capital reallocation from the large cap companies, which were being affected, basically these big banks, to even other sectors, which typically don't have lots of motion on their stocks. The news really pertained the ODPP saying they'll sue the CEOs of NCBA, the CEO of Coop Bank, and KCB Bank, right? That news caused a ripple effect at the NSE. And perfectly so understandable, the banking sector was affected. Reason being, the banking sector is the most dominant sector at the NSE. When you look at the market cap, banking sector alone actually accounts for over 50% of the market cap of the NSE. That is how dominant the banking sector is. And now because of that particular news, there was some capital flight where we saw some movement of capital from the stocks of those banks to even other stocks out there, mid-size to even small size or small cap, small size stocks within the NSE, which was an interesting scenario. But this teaches us that in case of very dire news, we could experience capital reallocation within a given stock market, okay? And then the third key lesson, which I believe every investor out there need to understand, is that valuation helps you to avoid hype. When you are buying any stock out there, ensure at all times you do valuation. And the essence of valuation is basically for you to really internalize and understand the stock you are purchasing. Is it overvalued, right? Is it undervalued? And even so, are you making the ideal investment maneuver? Or maybe you could be jumping on a given stock because you've heard it has hype, and yet in reality that stock is overvalued. And therefore, after you buy, after some time, once the intrinsic value of that particular stock or its true value hits the market, then that stock is going to see its price reduce. That is why it's important for you to do valuation. It's a very simple thing to do. And that's why even, guys, I did write a comprehensive ebook on how you can go about doing valuation. In case you want to know how to do the end-to-end valuation of any stock, down in the comment section, I'll put the link to that particular book. Go and check it out, read it, internalize, and be sure it's gonna be a key resource for you as you go about understanding if any company out there is valued appropriately as you are embarking on purchasing their stocks. So the underlying message is that don't make decisions based on fear, based on excess excitement. Also do some quick computations to understand if a stock is truly reflecting its true value, or even in case it has a bigger opportunity in that it's undervalued. So that when you get in, if it is undervalued and the future expectation of that particular company that is going to continue growing, chances are that particular stock is going to increase in price. Okay? And then, guys, the fourth lesson, which is very important for you to also understand, and actually saw that this week at the NSE, is that financial performance eventually shows up in share prices. And specific to these, I'm talking about the stock of a company like Centum, right? We all know Centum, which is listed under the NSE under the investment sector, has been having some changes on the company end. Simply put, it's been restructuring with the aim of actually clearing off the parent company debt, which has been there since 2020, and also just unlocking more cash flow, right, and capital for it to be able to undertake different businesses. Interestingly, Centum was able to achieve this because it actually was able to clear the debt of its parent company, which had been there since 2020. And secondly, it was also able to spin off some of its business or subsidiaries, case in point the likes of Nabo Capital and so forth, for it to be able to unlock cash flows. But then again, it did release its financials sometime till end of July. And of course, investors till end of July, early August, were also internalizing the financials of Centum. And one of the things which stood out is that some of its business segments did have decline in their revenues. That did actually have an effect on the stock of Centum because it made the stock of Centum to decline or experience share price depreciation at the NSE because of investor sentiments around the financials of the company. Despite all these efforts, the financials of the company, also there were sentiments from investors about just that particular decline. And even that is very reflected at the NSE because about 2 days ago, Centum is the stock which declined the most at the NSE with over 6% decline in a single day. That teaches us financial results of any company out there are bound to affect its share price. And even so, the results are most likely going to be immediate in the market because investor sentiments are going to reflect that. And then the fifth and last lesson I want to talk about, which also has come up and I've seen it this week, and that's worth discussing with you, is that price of ETFs move based on their underlying assets. And I'm saying so because, of course, that's a fact. But then again, at the NSE, we've seen interesting dynamics because we have two ETFs, okay? We have New Gold Issuer and then we have the Satrix. And on the New Gold Issuer, which actually is an ETF, which also reflects the global spot price of gold, we've seen some interesting movements. Of course, globally, gold price has been quite erratic most over the past 1 month. And that has also been reflecting in the ETF, which is backed by gold at the NSE, because we've been seeing a decline on most of the days on this particular ETF at the NSE, because it's actually mirroring the global spot price of gold. And then the Satrix index, we've actually seen a good number of the days is kind of like being stagnant, not much motion. That also reflects the underlying equities in that they haven't been moving that drastically. So that tells you when you are purchasing an ETF, don't expect it to be traded excessively at the NSE because investors out there are just buying and selling. An ETF is backed by a given type of asset, and based on how the asset is behaving, the ETF is going to follow the trajectory. And of course, we all know ETF is a good kind of investment because it assists actually manage the risk on that particular investment because it is a traded fund, right? It actually assists reduce the risk, but then again, it also moves in tandem with the underlying assets. Guys, those are the 5 key lessons which I thought I could share with you today, right? For you to also reflect upon them as you start your weekend. What do you think about these lessons? Comment down below in the comment section. Let's continue discussing.